The Fed has expected their fake inflation measures to finally achieve their goal of 2% or more at some point in the near future. While most developed nations have been unable to achieve anywhere near their inflation targets by printing excessive amounts of fiat garbage currency, that certainly won't stop them from accelerating those trends. Of course, real inflation has been up significantly, and some expect it to start getting out of control in 2021. Only time will tell. You came here for the truth, so let me unveil that for you. Today we're going to talk about inflation. I'm going to show you this in different ways. We are going to look at several indicators I think are important. You don't want to measure things just in the US dollar or just in the euro or the yen or any other currency. You want to measure it in other things as well. You want to look at different, maybe let's say non-conventional ways, because that's going to give us a different picture of the current situation. I have seen numerous reports. I have seen people in all walks talking about how the inflation rate has not picked up. I've seen the comments as well. You're telling me that inflation is so low. Why is it the case? You have to look at what is actually going on. My goodness, look at healthcare, look at tuition, look at the stock market, look at cryptos, look at all these different things that have risen so dramatically that doesn't keep pace with anything that is going off the charts. There is always going to be inflation in one place or another. As one bubble pops, it starts to deflate and that goes somewhere else. The energy goes somewhere else. And we find that all the time. There's always cycles, but you can see it in certain things that is unfortunate. Like I said, with the healthcare, with the tuition, that's not necessarily any better from one year to the next, but somehow you got to pay a lot more. It's not keeping up with wages and so on. Look, we're going to get into a lot of detail. No more ranting. Let's go. I wanted to touch on this and not just include the chart, but there's a little blurb here. I've got several charts to show you actually from real investment advice, but I wanted to make sure that I said this part. Trade. Broad-based tariffs on China have resulted in the highest trade deficit in the US-China trade history. The trade imbalance with China was supposed to grow smaller due to broad tariffs on Chinese goods. Instead, the trade imbalance surged as US consumers continued to buy Chinese goods, while US companies faced declining market share and sales as a result of the retaliatory tariffs. This is the reality of the situation. You cannot listen to what they tell you. It doesn't matter who is saying it. There is a trend in place. It's going to go that way. That's why we have to pay attention to not just one-off pieces of news, but we have to consistently be looking at it. That's why I get those comments all the time saying, oh, you always cover the same thing all the time. No, we have to be looking at certain indicators and keep updated on it. That's just the way it is. It's not fun, maybe. It's not so exciting. It's not random predictions on things in the future. No. We're looking at the real deal, and then you make the decisions based on that. US continued claims for unemployment. You could see what's been happening. Just want to touch on the fact that you have seen this tick up and it is expected to stay a little bit elevated throughout this period as we see many businesses that have been shutting down and so on. I'll give you some more numbers around that as well, but just giving you that on this page here. You could pause it if you're interested. Cumulative change in jobs since September of 2016, looking at what was happening right up into 2020, and then of course that dropped off. Now it has come up since, but you can see right there as they note minus 10.7 million since February. Big problem here as they are trying to get back to this, but ultimately millions of people are still out of work. Millions of people are relying on the government, but a $2,000 check, is it going to do anything? You get $600. Apparently millions of them were sent to the wrong people. I got to get some updates on that, but you just have to understand what's going on at the core. And if millions of people are out of work, that's going to affect the economy. There's no doubt about it. There's a chart just under this that I need to show you, but just wanted to mention this point here. Work from home migration. 67 million workers are estimated to be working from home today, or about 44% of the workforce. Here's the chart. You can see occupancy over time, March 5th to December 16th. I mean, it is not even close to what it was previously. Not even close. So this right here just shows you depending on the area. Okay, so on the right hand side, you just get in the legend right here, whether you're talking about Dallas and Houston and Austin, and then you go down further and further, New York, San Francisco. It just shows you, I mean, let's try to give you some numbers here. So at the top, obviously that's 100%, but if we move down to the bottom, at the worst point, it looks like New York was at something around maybe just a few percent. Hard to get an exact number on that. But depending on where you were, these have generally all come up, but it's still way, way below the total of what it was just a few months ago. Well, now time flies, but looking at this, it gives me this idea that with all these people working from home, yes, those people are employed. They're working for the bank. They can simply log in from home. Hey, it's all good. No problem, right? But what about the shop that they used to buy lunch from every day? What about that corner store where they used to get the newspaper? What about the subway, the taxi, the Uber, all of those different things that person would be using on a daily basis? That's not happening anymore. The downtown cores, I think, are contracting severely at this point. And that's where a lot of the economic activity was coming from. Certainly new things have popped up and new, expansions are taking place. There's no doubt about that. But I think this shift is going to take a lot of time to actually fill in. And we've got some issues in the meantime. Housing debt among the unemployed renters has spiked. Big problems here. As you can see what's been going on. I mean, as this time moves on, something that I've told you, I know you know it as well, these people, they haven't been paying their rent, haven't been paying their mortgage. The landlords, in some cases, haven't been taken on, from the tenants, and you see that. As a result, it's piling up, right? The Federal Reserve Bank of Philly calculates 1.3 million rental households where somebody had lost a job are now behind on average nearly $5,400 on rent and utilities. That is December's numbers, and the trend is clearly here. Every month it's just piling up, piling up, piling up. So if somebody doesn't have a job for a period of time, all their debt's adding up. Yes, that's just a few bills, but what about the credit cards? What about the other debt that they've accumulated on top of that? So who knows what the real number is? Several $1,000s. Now they get a job. They get their job back in 2021. Well, now they have all this debt. So of course, all of these different companies are owed that money. Are we going to have mass bankruptcies? Are we going to have people just suddenly and magically be able to pay it all back? Which direction does it go? A few charts that I've covered many times before, I'll run through them really quickly. Total debt versus the GDP. You could see going back from 1950 all the way to 2021. And all I wanted to note was that as the debt increases significantly, as you see it going up and up, the growth isn't there. The growth actually wanes. It comes down. It's been falling. They tell you that lowering interest rates is beneficial, but not in this case here. And you know that when they go into the negative, it actually ruins it, distorts it. And you know that this is a problem that it's not just the United States feeling this. My goodness, it's all over the world. Interest rates a function of GDP growth, wages, and inflation. Economic growth leads to rising wage growth, leads to price inflation. Economic weakness leads to falling wage growth and lower inflation as debt surges to make up for the shortfall. That's what you get right here. Real investment advice, putting out this chart if you want to check it out for yourself, but I think you get the idea. 41% of Euro investment grade index now yields in negative territory. The notional share of the Euro investment grade market where the yield is below 0%, it's 41%. If you look at this back at the beginning of 2016, it basically didn't even exist. And now today, 41%, it is getting crazy. The value of money is declining rapidly. And here we are. Take a look at this chart right here. It's a little messy to describe, but essentially for the first time in history, USD investment grade real yields are negative against a backdrop, all-time high duration. This is what we got to deal with right now. The whole thing is a mess. The bond market is a mess, and that is the real signal, not what's going on with Tesla stock, not what's going on with all these other high-flying stocks. No, we need to be looking at this as a telltale sign of what's happening to the financial system today. I told you I would show you these different indicators. Here is one: number of hours worked to buy the Dow, and it is just off the charts. So the chart here goes back from 1960 all the way up until today. And of course, for many, many years, we had fantastic growth in the economy. You look at this, it is fluctuating around. It's going, let's just say, never higher than 400, never lower than about 100 or so, fluctuating in between. Then we get into the bull run of the 90s, lower interest rates, and so on. And it sort of seemed to peak out for this period of time for, let's say, around 800 or so. And then today, we have far surpassed that. 1219, over 1200 hours to buy the Dow. Things have really changed. It is incredible to see what kind of madness we are in the middle of, but you never see it as you're in the middle of it. You never see that. But take a look at what had happened. This run up throughout the 90s, they were saying this is the new world, this is the new economy, everything is going to be fantastic. But certainly things changed after that. Many, many years of ups and downs. There was a housing bubble. There was the whole financial madness, subprime madness. You had the financial crisis, of course, everything that went on throughout this period. And certainly this is looking very bad when you measure people's wages. You look at what's going on with the financial assets. Things are completely out of whack. S&P 500 price to sales, record high, and it is going straight up. US total market cap to GDP, this is so-called the Warren Buffett indicator. It is, again, going off the charts, record high, and is continuing higher and higher. Bank stocks are back in vogue on stimulus and interest rate outlook. I think there's something else, that's buybacks. Buybacks are the reason why these stocks are looking attractive, because they're going to be buying back their own shares. It's going to send the price up, and you can get on the back of that and ride it higher. At least that's what they're telling you. This is the chart that corresponds to it. Bank shares beat the broader market in recent weeks. Many different businesses have really struggled. I talked about it at the beginning. If people aren't going to work, they're staying home, they don't need the Ubers, they don't need the taxis, they don't need the buses, they don't need the public transit. Take a look. We're on the brink of utter collapse. Yellow cab drivers in New York struggle to stay alive. With ridership down, it says right here, 80 to 90% since March. Drivers count themselves lucky if they're able to snag 3 passengers a shift. So big changes here. We'll see what happens. Macys said on Tuesday they would close about 45 stores this year as part of a 3-year plan to lower the store count in order to focus on its more productive outlets. Let's be honest about this. They're going to probably close them all. This is just the beginning. Family Video confirmed on Tuesday it would permanently close all stores nationwide. You're talking about a place that had previously 770 stores in the Midwest and in Canada in 2014. And this is what we see. These businesses that are no longer profitable, no longer perhaps necessary, they're going away. And as a result, a lot of the jobs are being displaced. People need to realize the industry that they're in. Is there any future? Now is the time to decide that for yourself. That's just my opinion. I don't want to impose on anybody, but I think that reality is really starting to set in for so many people. Kauai Marriott Resort is planning to cease operations on March 1st of the new year. Potential layoffs of 457 hotel employees. I just reading this actually. It says, resulting in the potential permanent layoff. Doesn't even make sense, but regardless, they are going to operate under this new business, not under the Marriott brand, but who's going? Are there any tourists going in? No. Hawaii is taking a real big beating at this point here. And I don't know what's going to happen in the medium term as you see the hotels, the offices, so many other businesses that are just really suffering. And I'm not sure what this industry is going to do in the in this period of time. It really doesn't look good. And all they can say is, we need a bailout. But of course, that doesn't fix the issue. If everything is closed, they can't actually have people come in, restaurants, bars, all these different things, curfews going on. If the curfews are there, you've got issues. I mean, it's all messed up top to bottom. That's all for this video. If you found it informative, hit the thumbs up button. When you do, you're supporting me. So please hit that thumbs up button. Thank you very much. If you want to learn how to sell stuff online, I'm always asked about solutions, why I never provide solutions. If you were one of the, let's say 20% or so who has made it to this far in the video, I want to thank you. Here is something that you can learn for free, Nobody teaches you this step by step for free. I give it away at the Amazon GPS. I've explained everything to do with the financial system. All the basics are here for everybody to learn. Maybe you already know, but what about your friend, your family, your coworker? They need to know. You can definitely take a look at my 2 books in the description below. If you haven't watched this video yet, please do. It's so amazing the way I put it together that actually tries to make it a little bit more exciting than my normal videos. Take a look at this. Take care.